In today's video, let's look at the median sale price per square foot in Portland, Oregon, Seattle, San Francisco, San Diego, Austin, Texas, Houston, Texas, and Miami, Florida. And looking at some of the overall news, I just did a quick Google search, and then we're going to jump onto the X.com. Grok says that are newsworthy in real estate. Welcome back to Shawn Realty podcast. My name is Shawn Yu from Portland, Oregon. The summer here in Portland is just probably the best. There's no mosquitoes like the Twin Cities. So overall, let's look at the overall market first. So there's many different news. Some markets are crashing, some markets are not. But when you talk about crashing after 35% increase in the last 3 years, it's not really, it shouldn't really be called crashing. It's called a market adjustment. So year over year, all Redfin Metro, it's 0.6% up year over year. And I mean, compared to 2002, it's down. That's what it means. Let's look at Portland, Oregon. That Portland, Oregon, the blue line is like overlapping with the red line, which is 2023. But I did zoom in, and it's basically 0.2% up since last year. Obviously, less than 2022. The same deal. So as far as I could go, that's right. It just overlaps. There we go. Oh, 2000. My error actually, it's negative 0.02% down. Sorry about that. So it's really not changing that much. But median sale price per square foot is $308 and 46 cents. Let's look at Seattle. Seattle is $486.26. Minus 0.5% down compared to last year during this time. San Francisco, $989.24 per square foot. And that's a negative 3.14% compared to last year. By the way, 2002 gap right here. So the bigger the gap between the green line and the blue line, people who bought during this time, they're going to be underwater. That's for sure. San Diego, minus 1.39%, $596.44 per square foot, median sale price. So they're down a little bit. But it's different than the most market, right? Because in 2022, they didn't do so well. So San Diego is sitting between 2023 and 2024 market. Less than 2024, but better than 2023. But when you zoom out, guys, the real estate market, what I'm breaking down right now, it just becomes pretty small. That's what real estate does with the inflation and everything. Here's Austin, Texas. Probably the worst crashed market is Austin, Texas, because of the tech boom, because of the big companies moving into that. Joe Rogan moved in there, and a bunch of Californians moved there, and it's just, yeah. So minus 4.5%, $219.27. That's the per square foot. It's pretty affordable right now. And it went up high as the peak was around $291 per square foot. And 2022, they had 23.19% increased in 1 year. Yeah, that's just unsustainable. And when you zoom out to 2023 and 2024, it's worse than the last 2-3 years. So the question is, in Austin, you just have to go back to 2020, maybe 2019, and see where it's at. And whoever paid that much, yeah, it's it's going to take a while to kind of balance. So if it's like 20%, it will take probably 7, 8, maybe 10 years to almost break even in certain cases. So, that's why it's buying right is really, really important. But year over year, negative 4.5%. That's Austin, Texas. Yeah. And Houston, Texas is negative 0.77%. Median sale price per square foot is $165.94. That's probably one of the lowest price per square foot in the big cities, big metro areas. And when I looked at this Houston market about 6 months ago, this is probably the market, if you're renting, it makes more sense to buy, for sure, even at 7%. Because rent is much higher than the home prices. As you can see here, there in the big metro areas, to be able to buy under $200 per square foot, that's like pretty rare. And in this case, $166 per square foot. So if you're in Houston, Texas, you may want to consider buying if you're renting. Although property taxes in Texas is pretty big, just like Texas. So just have to kind of shop around and know your budget, including the homeowner's insurance with a bunch of floods and the windstorm damages. Yeah, it looks pretty bad there, but still consider buying might be a good idea. Miami, Florida is still beating all the other odds. So they're at $390.44 per square foot. It still went up 1.02% compared to last year. Much better than 2022, much better than 2023, slightly above 2024 market. So that's what's happening. And out of all this metro that I just showed you, Austin is probably the worst. So when you hear the national news, there's certain markets are like similar to 2024. Certain markets are better than 2024. Some are worse. So if you average everything up, then what you get is national data, which is 0.6% up year over year. So it's almost like plateauing, some declining, some going up. Yeah, so that's what it's doing. And one of the real estate, I just Googled real estate news. So this kind of caught my eyes. The New York Times, U.S. homes are not selling and prices continue to rise. So they're talking about two separate things. Homes are not selling, meaning they're talking about the volume, the activity of home sales. That's definitely really down. However, home prices are continues to rise because certain sellers, they don't have to sell. They just take it off the market, and there's a supply and demand imbalance. So market, right now is very confusing market to many of us. It's very different than 2008, the '08 market crash time. We used to have like 18 months inventory. Right now it's about four months in Portland. Countrywide, I'm not sure. Let me take a quick look. I think they have inventory. Do they have inventory? I don't remember actually. Age of inventory, week of supplies. Yeah, week of supplies. So that's 15.8 weeks divided by 4. So that's about 6. No, yeah. My multiplication happens in Korean. 446, yes. So about 4 months of inventory supply. And going back to this, Right now, I don't think I've experienced a market like this in the last 17 years of selling real estate. It's a very odd market, but that's what it is. Homes are not selling, but price is still going up if you average everything out. Let's see what Grok says is newsworthy. Definitely, like AI like this make you lazy, but it is convenient because it summarizes it. I'll just go ahead and go through some of the key points that the Grok mentioned. Housing market trend. Existing home sales in the US dropped in June of 2025. Despite rising inventory with a high mortgage rate around 6.85%, continuing to challenge affordability. However, some markets are seeing price declines, with nearly one-third of major U.S. housing markets reporting falling home prices, though the median home sale price hits a record above $400,000, just like that headline. Foreign investment. Chinese buyers remain the top foreign investors in the U.S. Residential real estate by dollar value and purchase volume, with $56 billion invested over the past year. In 1 year, they spent $56 billion. Wow. I think the X was purchased by Elon Musk for like 44 billion. Wow. A lot of money is still pouring in from China, marking a resurgence in global interest. Policy and regulations. In California, new laws limit annual rent hikes for certain apartments to 7.7%. Certain apartments. While a proposal for extended eviction relief was rejected. Honolulu is considering property tax relief measures, and Chicago's mayor downplayed talks of a property tax hike. And you can kind of see where these news are from, by the way. So this one is DRE News. This is WRE News. Here's CNBC. And then, what is this? realestatenews.com and ABC. So you can kind of see the sources. Let's see, legal issues. The National Association of Realtors faced a dismissed lawsuit challenging MLS dues rules, and Fannie Mae is being sued for discrimination by over 60 former employees. Wow. Additionally, real estate brokers Orenthal and Alan Alexander face sex trafficking charges in New York. Ooh. Ouch. Faced the dismissal lawsuit challenging, Yeah, there's a lot of things going on in the real estate world, but I wasn't expecting what happened in New York. Ooh. Notable transactions. Saudi Arabia's public investment fund. So they have a public investment fund. They're apparently investing in like New York City, because New York City had a lot of declining in prices, and they're just maybe buying some good deals. I wonder, do we have public investment fund? I mean, that's like REIT, right? The real estate invested fund. So you basically invest in stock market, and then kind of like a mutual fund in a sense, I suppose. I don't know. I'm not an expert in that, but they have a national public investment fund investing in other countries. Market challenges. Seniors holding on to homes due to low mortgage rates are limiting inventory for first-time buyers, exacerbating affordability issues. Climate risks are also impacting luxury real estate, with $128.2 billion in weather-related damages in 2024, prompting shifts in buyers' preferences. So some markets, homes are not insurable. So if you can't get the insurance, that means you can't get the financing. If you buy with the cash, you don't have to have an insurance because you own that, right? But if you need to get financing, the homeowner's insurance is like the must. And we had a lot of wildfires, the weather storms, the floods, all of these things, and hails is just skyrocketing the insurance cost, the homeowner's insurance costs, which needs to be regulated, in my opinion, because insurance companies are just wild west. It seems like they can do whatever they want. They can pull out of the market. They can, deny. They can only pay like a portion of the damages. It shouldn't be that way. There has to be more regulations in the insurance industry, in my opinion, because I've seen, I hear the news. There's so many bad things are happening. But the seniors holding on to homes due to low mortgage rates are limiting inventory for the first-time buyers. So this is an issue, and right now the Trump administration is trying to get rid of the capital gain tax. Right now, a single person can be exempt from paying capital gain tax up to $250,000 when you sell your primary home. And they're trying to get rid of that. So people who have more than $250,000 or $500,000 for a couple, they can have more motivation to sell. So those homes who are owned by people who own free and clear, their capital gain is so big. So if they get rid of that, I could see that the more homes coming on the market, and it might actually relieve that supply and demand bottleneck issue. But yeah, that's one of the main issues. So I asked one more thing that says to Grok, July 2025, and let's see what it says. Home prices. Annual home price growth slowed to 1 to 1.8% in June of 2025, down from 5% a year earlier, with nearly one-third of the 100 largest U.S. markets seeing price declines of at least 1%. National median home price was $447,000 and $54, up 1% year over year. So that number can fluctuate depending on which site you go to. Earlier I mentioned 400,000, right? But now this says that. So yeah, there's no super accurate data. It is what it is. Housing market is just big. 1% year over year, but the real inflation adjusted prices are falling, improving affordability in some areas. Markets like Florida, Texas, Hawaii, Washington, D.C. reported negative price growth, negative 0.5% to negative 2.1%, while Midwestern and Northeastern markets such as Illinois, plus 6.4%, Rhode Island, Connecticut saw stronger gains. Housing inventory rose significantly with 1.97 million homes for sale in June 2025, up 7.8% year over year, 29% from June 2024, reaching nearly 1.1 million active listings by June. So yeah, 1.97 million homes sold in June 2025. With this increase, the 15th consecutive month of growth, providing buyers with more options and less pressure, though inventory remains below pre-COVID level. That's the Redfin data there. Mortgage rates. The average 30-year fixed mortgage rates was 6.8% in June of 2025, down slightly from 6.9% earlier in the year, but still high, doubling from pandemic era lows. Experts predict rates may stabilize around 6.5% by year end if inflation continues to cool, though significant drops are unlikely. High rates continue to suppress demand and discourage homeowners with the low rate mortgages from selling, contributing to the lock-in effect. So right now, the current administration and the Federal Reserve, they're like doing tug of war. The Federal Reserve, their main goal is to really give benefits to the big banks, and the current administration is trying to do the business as usual with the cheap money, just pumping in the money. That's what they have been doing, and that's what they want to do, because that's the only way you could actually make things work in this country, it seems. But yeah, it's really interesting dynamic, based on what I know. The Fed funds, the Federal Reserve, they're really there for the big banks. And, it is what it is, I guess. But yeah, I don't know what's going to happen. Depends on that Fed funds rate. It's going to impact the housing market, the mortgage rate significantly. Anyways, sales activity. Existing home sales rose 3.8% year over year in June 2025, with 487,806 homes sold, but activity remains sluggish at about 75% of the pre-pandemic level. Only 31% of homes sold above list price, down 4.1% from last year, indicating a less competitive market. Median days on the market increased to 39 days, up 6 days from June 2024. And yeah, still 75% of the pre-pandemic level. So that's the key point. We used to sell a lot more homes. The pandemic happened, the number shrunk because people didn't want to get out of the house, right? People didn't want the people like home buyers to visit their homes because it was during pandemic. I remember like wearing masks. I remember like asking the seller, hey, can you spray some stuff so you can cleanse the air? I remember waiting outside, going in one by one. It was just chaotic time, but either way, right now it's still like 25% less the sales activity is happening. So we're not quite there yet to sort of normalcy. What's this? Regional variations. The Northeast and California dominate as the hottest market, with the states like Connecticut, New Jersey, Massachusetts leading due to stronger job growth and demand. Some belt markets like Austin, Phoenix have cooled due to overpopulation and rising costs, with some shifting toward the buyer-friendly conditions. Big time, I think. Commercial real estate. The commercial sector is poised for recovery in 2025. Interesting. With office markets showing early signs of revival and retail maintaining low vacancy rates. Industrial leasing is normalizing, and the data centers are booming due to AI and cloud computing demand. However, high interest rates and upcoming loan maturity pose challenges. With office market slowly showing early sign of revival, I'm not so sure about that. And I think upcoming loan maturity, So the commercial loans have a shorter pay off, years, and a lot of those loans are due soon. And some of the commercial buildings are selling less than 10% of its previous, like 2019 values. So I don't know if that is an accurate one. Let's see the source. CBRE is the source, and then Deloitte Insight. So that's another investment firm, I believe. Yeah. And they have CPA stuff too, but financial company. We'll see. So key trends: buyers are more strategic, focusing on value, which they all should do, right? While sellers are adjusting to the realistic pricing. Yeah, so that's what he's sharing. And I just kind of have sort of slow pacing podcast style real estate news. I'm not sure if you enjoy this, but if you're still here watching, I appreciate that. Hit the like button and subscribe if you like. And to sum this up, I'll just give you my own opinion, which Grok cannot do. Right now, I am experiencing sort of like slow activities, especially, how do I say this? If the listing is slightly overpriced, we're not getting any showings. And I'm talking any showings. So the buyers know what good value homes are. And obviously that's, dependent on, the how rare they are, what kind of, like one level homes are still hot. I mean, they're still selling. But if you have not with the lower desirability homes, pricing it right is going to be one of the key ingredients to sell well in this market. As I've been saying this over and over, but if you don't have to sell, let's say you have, sort of like small homes in a good rental market, this is time to just go ahead and rent, I think. Or if you don't have to move, just live in that house for another year. Because right now the market is pretty soft. So one last thing is, if you have to sell in 2025, I wouldn't wait. July, the end of July is still a good time to list. Once you go to like end of October, things cool down really big. So if you're thinking about selling in 2025 and you have to sell in 2025, then just go ahead and list it as soon as you can. And reputable, the hardworking listing agents should be able to help you to list your property within about 3 to maybe 6 days. I mean, you do want to do some basic cleaning. That's one of the most important things. Putting things away, like kids' toys, or taking out clothes that you never wore and make the closet look bigger. Kind of arranging some of the furniture to show the rooms bigger, and getting some of the things that you don't really use. So yeah, I mean, it could take about a week to 2, but if you just push it hard, you could list in 1 week. So if you have any questions about the Portland, Oregon listing and housing market, let me know. You can give me a call at 503-515-4499. And yeah, thanks for watching. Have a great weekend, and I'll see you on the next video.